Hey, how's it going? This is Patrick. Welcome to SEC Reporting. Today we're going to talk about grammar tips for the SEC documents, the 10Qs and the 10Ks specifically. And then we're also going to talk about the liaison that we have with both internal parties and then also external parties. So with that, let's go ahead and get started. Alright, so first things first, let's go through grammar tips for the 10Qs and the 10Ks, and really for that matter, any other SEC filings that you're in charge of. As you can probably see by now, to be good at SEC reporting, you really need to have an expert command of the English language, including all the grammar and the idioms of it. Now, there are obviously tons of rules in the English language. I'm just going to talk about a few of the rules that you're going to see time and time again in the SEC reporting that might not be quite as common in just regular writing. So the first one is semicolon usage. One way to use semicolons is to separate a list of bullets, kind of like the comma would separate three or more items in a list. So for example, I love Sarbanes-Oxley, financial reporting, and then an and, revenue recognition, period. So it's kind of like a flowing sentence with the bullets in there. Another way to use a semicolon is when you want to separate two or more what I'll call long-winded clauses that are in a paragraph that might be a little more difficult to separate with just a comma. Maybe the two different clauses in that sentence also have commas within them. Maybe there are multiple lists within each component of that sentence. Now you start to get to a point where you're starting to ask yourself, okay, do I need to break this into two sentences when you're talking about separating a long-winded sentence? But technically, to have it correct grammar-wise, you can separate with a semicolon. Now, this one is very, very common in virtually all SEC filings, and that is the use of either us or we, and we meaning first person. So we, us, our, that would be as compared to saying the company. And both of these are acceptable in SEC writing, but you need to be consistent. For example, in the MD&A pages, if you start saying us or our or we, then you need to be consistent and only use the first person in the MD&A section. Now, when you get to a different section, like the F pages, it's okay to switch over and start saying, okay, now we're going to say the company. But as long as you're consistent in those F pages, you can't have a we and a the company in the F pages together. Now, here's an example. I'm not going to call out the company, but this is not materially incorrect, but here's just an incorrect usage of that rule that I just went through, where here they say our primary sources of liquidity, and then right below that they're talking about the company. And so this is one where it rubs you the wrong way. Again, investors aren't going to sue them over this, but we'll talk about just the importance of some of these smaller items here in a little bit. Next, let's talk about defining terms. So when we're defining terms in the document, we define them if we have this long phrase that we want to replace with a shorter phrase. So for example, we don't want to have to write out generally accepted accounting principles every single time, right? It just gets long-winded and it gets annoying to read that over and over again. So what we do is we write it out the first time that it appears in the section. So in the either MD&A section or the risk factor section or the F pages section, the first time that it appears in that section, we have to write it out and then we define it and we say GAAP, G-A-A-P, in caps. And that's one way to do it. Is if you look at the slide here, there are a few different ways. We could say, in this case, we're talking about an ATM, at the market sales agreement. We can either say quotes around the ATM when we're defining it and with this parenthesis. we can have a comma and say or ATM and then end it with a comma, and then we've effectively defined ATM or at the market. And then we can also do parentheses. Just to drive it home, here's an example of how this company has done it. So what they're saying is Pizza Inn buffet restaurants, they don't want to have to repeat that full phrase every single time they use it. So they say it once and then they've defined it. And then let's look, so later on right here, they say 18 buffet units. We can really think of it in our minds, okay, those are Pizza Inn buffet restaurants. Those are used interchangeably. They just don't want to write that out every single time. So that's how to define terms. I'll tell you, the most popular way to define terms is going to be in SEC filings is going to be with this parentheses in the quotes. However, this way is probably second most, a distant second, and then the parenthesis, while acceptable, is just not used that often. So that's definition of terms. Now, respectively is another kind of nuance of 10Qs and 10Ks and SEC filings. For example, when we have, it's typically used just like in this example on this slide where we've got June 29th, 2014. That's going to apply to the 91%. June 30, 2013 is going to apply to this 93%. And then at the end, we have a comma and respectively. This respectively sets off to the reader to tell them, okay, item A, item B goes with item A, item B, in the order that they are presented on the page. Next one, which is definitely important too, is writing out numbers. Now, this one's pretty simple. Any number that is 10 or less, you should spell out the number. TEN or ONE, spell out the number. Any number that is more than 10, you should write out the number. So 11 for 11. All right, comma usage. Now this is kind of all over the place in SEC filings. People will put commas wherever they feel like it a lot of times, but there are a few rules that really should be followed when you're talking about commas. So when you have a list of 3 or more items, the last comma is optional. So let's look at this example. Internal control testing is cool because it's fun, number 1, I like doing it, number 2, and it's useful, number 3. That comma there between the it and the and is optional. It doesn't matter which way you do it, whether you want to add that comma or not add the comma. Whichever way you pick though, you can guess I'm going to say you need to be consistent. Now, more common than not, that last comma is omitted. Also, we add a comma between 2 separate clauses that have both a subject and a verb. This rule is not to be confused with this list of items rule. So here's an example. The company loves internal auditors because they add value, and then so that clause right there can completely stand alone, and in this case the comma is accepted, and not even just accepted but required. And the company likes external auditors because they bring donuts on Fridays. So the company likes external auditors because they bring donuts on Fridays. That can also stand alone. Therefore, this comma is required here. Now, the next thing that we're going to talk about is it's really important to have an accurate and typo-free draft that you're doing with your SEC filings. Now, there's never been a restatement, as far as I'm aware, of just a simple comma being left out here or respectively that was lost. That's really, it's not going to drive a restatement typically. But with that said, people will lose confidence in your filings if they see a lot of typos. They start asking more questions. I don't know about you, but when I'm reviewing something and I find one little error in it, then I'm going to dig deeper and say, okay, what else is wrong? What else should I be looking for? What other errors are in this filing? And it really is going to help everyone get more confidence in you, including your boss, the external auditors, which is really important. I can't stress enough how important it is for the external auditors to have confidence in you. It's one of those soft things that you can't really put your finger on, but when it comes down to it, it ends up being very important that they really have confidence in what you're doing and that what you write and your filings are actually accurate. Investors will have more confidence, maybe in you, more confidence in the company. And same with the SEC, they'll have more confidence in the company's filings if they're not seeing a lot of these typos. And so with that, let's talk about our first review question now. We have to have review questions for this to be qualified as CPE, in case you're wondering. And with that said, let's get into it here. So which of the following is a grammatical item that you should follow when preparing the 10Q or 10K? So A is use we and the company interchangeably, even in the same sentence or section. B, spell out numbers larger than 10. C, acronyms do not need to be defined. And then D, define acronyms the first time that they appear in the section. So again, the question is, which one should you follow? I'll give you all a second to think about it. The answer is D. So define acronyms the first time that they are used in the section. Let's look at the other choices and we'll talk about why they are not correct. So we and the company cannot be used interchangeably or should not be used just interchangeably in the same section. You need to be consistent in that section. Spelling out numbers larger than 10, that's opposite, right? You need to write out numbers that are larger than 10. So 12 should be written out as 1, 2. You shouldn't spell out the word 12. Acronyms do not need to be defined. That's wrong. Acronyms do need to be defined. Even those obvious acronyms like US or GAP, you should define them. With that, let's look at a practical tip. So this might be a little old school and you might not see this, but chances are in some SEC filings that when you're getting comments back from certain people, you're going to see these types of handwritten edits. And so we should take a second to just talk about what in the heck some of these marks mean. I think it really originated from attorneys, and it has a great place in what we do back when we had a lot of handwritten comments. Now you're going to see a lot more of word track changes like this than you will someone scanning and emailing you these types of comments, but we should know how to incorporate them and what these different marks mean. So let's look at it. This C right here, it just means that should be capitalized, and you can kind of see what we're saying here. So that C, this is how you would reflect that in the document. Then here, insert this little caret right here and then a line with the wording that needs to go in there, who are at least 21 years of age, and you can see this is inserted here. This little comma needs to go away, and you can see they've deleted the comma. You kind of see that it's gone there. This discretionary is deleted, so you put a line through it and a little squiggle. And then here, this one might not be you might not be familiar with this one, but it's a good one to know. It's really a common attorney one, is this STET, S-T-E-T. And I don't know, it's probably some Latin word, but all it means is that never mind or disregard this edit here. So what happened is the person printed off this page here, they wrote all these comments, and then they crossed this out, and then they thought, you know what, actually we need to keep that respectively in there. And so they put this stet on here, and that just means disregard that. And you can see in the revised version there is no change to that respectively, right? And with that, let's look at our second review question, and let me read this out to you. So it's a fill in the blank. Now, when updating your document with handwritten comments, the term stet means, so A, insert a capital letter here. B, disregard this edit. C, add a paragraph break. Or D, remove this word. So I'll give you all a second to think about that. And the answer is B, disregard this edit. A is not correct, so the capital letter typically will be written out, or you can also put two arrows above the letter or two arrows below the letter pointing down if you want it to be lowercase and it's presented as uppercase. And then C, add a paragraph break. That is not correct. Technically, the correct way to add a paragraph break in a handwritten comment is a backwards P. It's not used that often. Oftentimes people will just write the word new paragraph. And then D, remove this word. Edit is annotated with just a line ending in a small loop or a squiggle through the word. Alright, so now we're done talking about grammar and some of that more logistical stuff. Let's get into some of the good stuff here. We've got internal parties involved in the filing, and then after that we'll talk about external parties, but internal parties first. A really well-functioning SEC reporting process at an organization is going to have a significant level of involvement from either internal individuals besides just the individual responsible for preparing the filings. Now, it's absolutely critical that there's at least one individual that prepares the tie-up binder and does updates all the financial statements and the various components of the filing, and then a separate individual that reviews every single word and ties every single number back to the support. There really is no room for errors in your filings, and then those involved in this process, either the preparer or the reviewer, they really need to have an excellent command of the English language, and they must have an in-depth understanding of the punctuation and the grammar. And documents filed with the SEC, they need to be as clearly written and typo-free as humanly possible. Now, the various individuals in the accounting department that lead up to the CFO, they should really read the whole document as well and make sure that everything makes sense and all the material facts are included in there. Now, outside of the accounting department, there are certain sections, typically in the MD&A and the risk factors sections, that will need to be updated by individuals outside of the accounting department. These include legal footnotes about ongoing lawsuits, technical sections about research and development projects, maybe information about competitors, information about patents and copyrights, and then other sections that are just outside of the expertise of the accounting department. As accountants, we can't just roll forward language that we're not sure is accurate. We need to confirm every month, if necessary, that information is still accurate if we're not sure that it's accurate. Now, one thing that I want to talk about is certifications. So the CFO and CEO must certify as to the accuracy of each 10Q and 10K filing. Okay, this sign-off, it gets filed with the SEC, normally with this type of S, backwards S, but then internally at the company, companies should maintain an actual hard copy version of this signature or a DocuSign version of this signature. Either way works, but they need to get the actual signature of the filing on this particular certification. And then, as noted earlier, there are several important disclosures in the MD&A section that just really must come from individuals outside of the accounting department. So in an effort to emphasize the importance of that information provided by these non-accountants for the SEC filings, we don't want to get people that just say, oh yeah, nothing's changed, and they don't really understand, okay, this is incredibly important. We could have lawsuits if this is not updated. You really need to give me good information. One thing that companies often do is they do these sub-certifications. And the sub-certification, it's almost like a little mini rep letter written from the executive to the CFO or to the CEO, saying things like, I'm not aware of any additional accruals that I didn't tell you about, or I'm not aware of any related party transactions that I haven't already told you about. It's this little miniature rep letter that will get filed and maintained in the SEC binder typically, or maintained in electronic format to be able to be recalled when needed. And now these sub-certifications, it's not like they're going to really shift a lot of blame for misstatement off to the executive team. It doesn't really work like that. But what it does is it kind of it creates this more of a practical purpose that makes everyone think twice. It makes them understand how incredibly important it is to give accurate information to the accounting team. And it's one more thing to hold people accountable as well, to ensure that they understand the importance of getting good information up to accounting. Now, another external party, it's kind of external, it's kind of internal, it's kind of right on the cusp there, right? The board they're not employees of the company typically. They're typically independent of the company, with the exception is oftentimes the CEO will have a board spot. However, it'll typically be a non-compensated position. Either way, the board of directors is definitely an important party, and it's typically composed of independent individuals. And then the main party that, from an SEC reporting standpoint, that we think about is the audit committee. Now here on the slide is just a typical structure. You could have a lot of different structures with the board. So you'll have a board of directors, and then that's same members of those board of directors will also sit on these committees. And the audit committee is the main one that we like to think about, and it is required for all publicly traded companies to have this audit committee. And so audit committees, they need to approve the SEC filings. Typically, all of the Q's and the K's they need to approve in either a unanimous written consent, or they need to approve it in an in-person meeting with it being documented in the minutes as a resolution that they are approving the financial statements to be filed with the SEC. All right, so with that, let's go to our third review question here, and I'm going to read it out to you. It's a fill in the blank. The purpose of a sub-certification statement is to blank. So A, provide absolute protection to the CFO from errors made by other executives, to provide additional confidence to the CFO and CEO that the other executives have disclosed all material information to the CFO and CEO. C, to satisfy SEC requirements that all companies must have a sub-certification process. Or D, provide tie-out support for the statement of operations. So let's think about that for a second. And answer is B, to provide additional confidence to the CFO and CEO that the other executives have disclosed all material information to the CFO. So generally, the CFO and CEO can gain additional confidence that the other executives have disclosed everything important to them. Now, it's additional confidence. It's not absolute confidence. So this first one, absolute protection, it's definitely not absolute protection. Satisfy SEC requirements. It is not required for companies to have a sub-certification process at their company. And then provide tie-out support for the statement of operations. It doesn't provide any support. There are typically no numbers in these certification statements, so it's not tie-out support. All right, now let's talk about some of the external parties that we need to interface with. First one being the external auditors. Now, like companies management, the external auditors have a lot riding on the financial statements being accurate. The audit partner that's signing off on the 10Qs and the 10Ks has a lot of individual liability associated with those documents. So they have a high vested interest in making sure that everything's very accurate in there. So even though technically the auditors are only providing a review during Q1, Q2, and Q3, they still need to do a significant amount of work just to ensure the accuracy. Now, in practice, what ends up happening is that the auditors will do an enhanced amount of work during the reviews. They don't just wait until the year end comes to actually start testing things. Because what happens is that if, let's say in Q4, the auditors find an error and it relates to Q1, then they'll go to management and say, hey, we found an error. Management will say, well, what's wrong with you guys? Why didn't you find it in Q1? And then the auditors will say, well, we were just doing a review. We weren't really doing a full audit. And just the explanation doesn't really fly well. So I think it's the right thing, too, that the auditors are actually doing a lot of work on the quarter financial statements, too, even though they're just doing a review. So let's talk about kind of the segmentation of the external auditor market here. So, of course, you've got the top four, Big Four, PwC, EY, KPMG, and Deloitte. And then the second tier is made up of a whole lot of other organizations. You've got BDO, Grant Thornton, RSM McGladrey, a whole lot of them. Now, there are a lot of other second tier firms that can do audits of publicly traded companies. The thing is that they need to be registered with the PCAOB, and they'll let you know right away whether they are or whether they aren't registered with the PCAOB. And then there's another thing, is that there's a lot of times there's this stigma of going with a second tier firm, and I personally found it to be unfounded. After working at both Big Four auditing firm and a small second tier auditing firm, and then a medium size to large size second tier auditing firm, it really, you can't generalize and say second tier is not as good as the first tier. It's just not the way it works. There's different engagement teams that you're going to get in the different regions, and one region might be great for a particular firm, and then that same firm could have an engagement team that's not really great over on a different coast, let's say. The one thing is that there's a huge stigma with board of directors and investors. They always think you have to have this Big Four auditing firm if you're publicly traded. It's just not the case. Now, one thing that you will definitely see going from a Big Four to a second tier is cost saving. You will almost always see it, and it'll be significant too. You were talking 50 to 75% cost savings. So it's something to think about. A lot of times, the audit committee of the board and the board itself, it's not even open for debate. They will not allow a second tier audit firm in there. So the next thing is with external auditors. Let's talk about how we interact with them and how we interface with them. It's really, really important that we do this right. And so there's typically, from a financial reporting standpoint, there's two types of main issues that are going to come up. You've got these complex accounting issues or other challengeable accounting issues, and then you've got financial statement disclosure, just the wording of things, of how you're putting them in the footnotes and in the financial statements. So let's talk about that first one, complex accounting issues or other challengeable accounting issues. They come in two forms. They've got ones that we knew about, that we put together a memo, it's very premeditated, and then you've got this second tier of them that are just like out of the blue, an auditor walks into your office and just launches a zinger at you where you're thinking, oh my gosh, I never thought about that. Hopefully those don't happen very often. For those complex ones around the complex transactions, the ones that we actually know about in advance, let's think about those first. It's important you want to identify these issues as far in advance as possible. If you're SEC reporting or technical accounting, oftentimes at smaller organizations, that's one and the same. Even at some of the larger organizations, they work very, very closely with each other. It's as far in advance as possible, identify that you have an issue, ask the GL team some of those tough questions, be at some of those meetings, make sure you have a good open line of communication with the GL team. Now, if necessary, prepare a memo draft and obtain internal sign-off on that draft, and make sure everyone on the internal accounting side is in agreement on the accounting treatment on the particular complex transaction. And then send the draft over to the auditors in advance of the GL close. And then with the memos going to auditors, one thing is do not ask for auditors to provide a list of comments and edits on your memos. On the more complex issues, it's a great idea to get it to them in advance, but tell the auditors very clearly that you're not looking for them to provide a red line memo back to you. This is management's memo, and we don't want to set a precedence of the auditors providing all these edits in memos. I tell the auditors that we'll need to discuss anything significant that they're taking exception with, and then I follow up and make sure that they're fine with the accounting treatment. Now, if they do take exception, I'm going to revise the memo accordingly, but I don't need them to give me a bunch of edits and red lines and them to start taking responsibility for that memo. So it's way more common than most accountants really lead on to, but at smaller non-public companies, you've got auditors that start getting really involved in the financial statements. If you're going from non-public company to a publicly traded company, that is not how it works at a publicly traded company. It truly is, the auditors are independent of management at the publicly traded companies, and management, from my experience, really truly owns all of the accounting treatments at the organization, not the auditors. Now, the other type of questions that you'll get from auditors or other interfaces that we have are kind of those spur-of-the-moment questions that just fall into that other batch. Those things that just really were not on our radar, and we're thinking, oh man, I don't know if we got this right. Now, hopefully those things are few and far between. When they do come up, there's something really important to really think about, and that is that these auditors are very, very sharp people. So if you're working with a big four accountants, these are typically the individuals had a 4.0 GPA from a reputable university. Typically they're CPAs. They're hand selected from other 4.0 CPAs, from other 4.0 GPA students from reputable universities. And when you start dealing with the managers, these are the best of the best. And then in my experience, it's not common that individuals make it to that management level without being pretty sharp. So they've trained their whole lives to find something wrong with your accounting. In short, they're very good at what they do. Don't try to play games with them or be cute with your accounting treatments or sell stories that you really know you can't back up. While the auditors do everything in their power to prove the numbers are accurate without just taking management's word for it, there's just certain issues that come down to just that. They have to take management's word for it. When management says what they're going to do in the future and accounting treatments based on that, it's oftentimes auditor's word against management's word. If something hasn't happened, there's no way to really argue one way or the other. So as a member of management, that's why it's so important to be honest with the auditors and don't spin stories that you know are pushing the envelope. Oftentimes these stories are going to fall apart, maybe in a later quarter, and then the trust is gone. And once the trust is gone with the external auditors, they no longer believe what you're saying. And it becomes much more difficult to convince them of appropriate accounting treatments, even when you aren't pushing the envelope. So when you get difficult questions from auditors, first of all, don't panic. You need to think well on your feet, and you need to know your company. And it's okay to tell them that you'll look into it, that you'll get back to them. When you do look into it, research it really well. If it's material enough, talk with your boss before you communicate back with the auditors. I like to err on the side of over-communicating with my supervisors and to make sure everyone's on the same page in the accounting department when issues come up. I would much rather over-inform people in the accounting team than to be in a position where I didn't tell someone something and they really felt like I should have. So with that said, I like to get all the facts before I go talk with people. I want to make sure that I can anticipate all questions. I kind of put my boss's hat on and think, okay, what would I want to know as when Patrick comes in and starts and presents this particular problem or issue? What's going to be his first or her first follow-up question? And I try to anticipate that and get the answer before I even go in there. Now, these same concepts apply to financial statement disclosure. Be honest, know your business, know your documents, your 10Q and your 10K, and know the accounting. We know we also can't have auditors writing our financial statements. That doesn't mean that I won't take their suggestion for edits if they are good edits, but it means that the document needs to be very accurate before I even give it to them, so that they don't have any of those tough questions about missing disclosures or materially wrong numbers. The next external party that we're going to talk about is outside SEC counsel to the company. So some of the top SEC law firms are in this list here: Latham Watkins, Cooley, Skadden, Davis Wright Tremaine, Wilson Sonsini. Now, it's difficult to see exactly who the leaders are because a lot of these law firms, or probably all of these law firms, do a lot more than just SEC reporting. But these are some of the bigger names that you're going to see in the industry. And then also, this industry is highly fragmented. It's not like the public auditor industry where you have the big four firms that make up a majority of the work. There are a lot of really small boutique firms, maybe just one-man shops for SEC outside counsel that do a fabulous job. So they don't break into tiers like they do with the audit firms. But these are just some of the larger, more popularly used outside counsels. Now, it's absolutely critical that the person in charge of SEC reporting have a direct line of communication with the outside SEC counsel, and that SEC reporting person feels comfortable either picking up the phone and calling SEC counsel or sending an email with questions about certain SEC filings. And then below are some of the common issues that SEC counsel will be best suited to help with. So technical SEC questions as they relate to any rule or bulletin or law that the SEC has. Risk factor review. Outside counsel is great at reviewing your risk factors, and it's absolutely critical that outside counsel gets a good read and provides some edits on those risk factors. Also, determining which exhibits to file and when to file these exhibits. There may be stock-based compensation plans that need to get filed. There could be other major agreements that need to be attached to the 10Q or 10K. Also, the exhibit index in the 10K, which is pretty exhaustive of an index, needs to be updated every year. And the 10Q index also just needs to be refreshed and reviewed by the SEC counsel. SEC counsel is good at determining when to file an 8K or any other SEC filing. A lot of 8Ks, it can be challenging to determine when an 8K is necessary, or maybe if it's not as significant of a transaction, perhaps a press release is sufficient. It's always good to check these things with SEC counsel just to get their take on it, to make sure that you're filing your 8Ks when you need to. Some 8Ks are specifically mandated by the SEC, and some of them fall into kind of a gray area on whether you need to file it or not. Now, the SEC counsel should also review every single SEC filing in their entirety before they're filed with the SEC. Now, around the time that I provide the 10Q or 10K draft to the auditors, I also provide a copy to the SEC counsel. What I've found is that over the years, my SEC counsel has been an incredibly valuable resource. If you're going to do SEC reporting, make sure that you have an open line of communication with your SEC counsel. Now, the next topic that we're going to talk about is going to be Edgarization and XBRL tagging. So the SEC maintains a database of all public company filings known as Edgar. You've probably all heard of Edgar. There's a specific process that companies need to follow to submit any filings to the SEC. You can't just email it to them. So additionally, the F pages for the 10Qs and 10Ks need to contain XBRL tagging. Now, while not technically required by the SEC, virtually all publicly traded companies use a third party to submit their SEC filings to the SEC. Now, a majority of the publicly traded companies also utilize their Edgarization third party to prepare the XBRL tags, whereas a lot of companies do their XBRL tags internally as well. Now, Workiva is the dominant market leader for the Edgarization and XBRL tagging. They own over 50% of the market share by certain estimates. And then there are a few other established companies that provide these services as well, and they do a great job. You've got Donnelley Financial Services, you've got Merrill, you've got RDG. There are a lot of them that really do a great job. Now, Donnelley is probably second place to Workiva, and they have a great tool called Active Disclosure. It's a very robust system, and it uses Microsoft Word and Microsoft Excel files as the actual documents that maintain all of the information, and then you upload those spreadsheets into the filing software, and it puts the numbers where they belong. Now, it's a great thing. Now, the one thing, so with Workiva, instead of actually having Microsoft Word files and Excel files, they use these simplified versions. They're kind of like Google Doc files where they have just the basic Excel functions and the basic Word functions. They don't have all that complex formatting, and it's their own proprietary spreadsheet or document application. Now, sometimes being more simple is much more beneficial, and this oftentimes is the case with these filings. For SEC filings, users don't need this exhaustive, extensive list of fonts and formatting. With Workiva, the simplification really eliminates a lot of that just hidden spacing and margins that show up in Word files and font compatibility issues. Typically that I run into those types of things with Word files. Now, the learning curve for using Workiva is also really, really short. It's a very simple program. There are not that many options in there, and most of the options are fairly intuitive. And also with Workiva, they provide phone support. They're always available. I've never had to wait more than 30 seconds to get an actual human on the phone. There's no complicated prompts to go through. Now, I'm not comparing them to Donnelley in that sense, in that Donnelley has excellent customer service as well. And I'll probably end up doing a course on comparing Donnelley and Workiva and Merrill and RDG and maybe a couple others and get some of the pros and cons, but those are just a couple high-level ones. So a practical tip: if you're still filing your SEC documents using the old school way of maintaining your draft in a Word file with these tables and then sending it to the printer for Edgarization and then sending scanned pages of red lines during the last week, you need to stop that process now. As soon as you finish this 10Q or 10K that you're working on right now, get some demos set up with Donnelley's Active Disclosure and Workiva's WDesk. Get some proposals going and sign up for something, because once you're up and running with one of these electronic versions with the embedded files, you're going to wonder how you ever waited so long with all these pencil changes. Now, another thing to think about is whether you want to do all of your XBRL tagging in-house or whether you want to outsource that function to one of these, Workiva or Donnelley or RDG or Merrill. Now, I strongly recommend having a third party do the tags, and then they need to get reviewed internally. Now, while the skill level of XBRL taggers varies, they're generally going to be far better than internal XBRL taggers, because the external taggers, they do this stuff all day. They've got a list of 8 to 10 clients that's all they do all day is XBRL tagging. So it's really not that much more expensive, and honestly, with a few of these guys, you actually can't even do your own tags. You have to have them do it. I know RDG filings, you have to have them do the tagging for you. You can't do it yourself, which a lot of people would just say that's fine. That's fine if they want to do the tagging instead of the company internally doing it. Now, in case you're not already using Workiva, here's what it looks like in the Workiva screens when you actually go to start filing either a 10Q or a 10K or an 8K. You go through a wizard like this. A lot of the other Edgarization systems will have something similar, like if it's Donnelley's Active Disclosure or RDG or Merrill, there will be a similar wizard to this. And really, you just go through the steps. You start with the first one and you hit the button and it Edgarizes the documents. You hit the next one and it sends the XBRL there. and it gives you these warnings. Now, these warnings aren't looking for typos or anything like that. What it's looking for is to make sure that electronically the system is ready for submission to the SEC. And then you go, once these things are fixed, it will let you do a test filing. And the test filing, you can do as many test filings as you want. There's no signaling to the SEC that, oh, why did these guys do a bunch of test files? They don't even look at it. It's really just to make sure that when you go to live file, that the system, the SEC Edgar system, is going to actually accept the document. And then, at least in Workiva, it's going to look something like this. You get a checkbox next to each item in the checklist once it's all completed. And with that, let's get to our final review question. So all of the following companies offer 10Q or 10K Edgarization support services, except for which one of these? So we've got A, QuickBooks, B, Workiva, C, Donnelly Financial Services, and D, RDG Filings. So I'll give you a second to think about that. And let's look at the answer. So the one that does not provide that service is QuickBooks. So QuickBooks just doesn't do that. Workiva, of course they do. They're the market leader in providing it. Donnelly, yes, they definitely do. RDG does as well. And there are several other Edgarization providers that can provide that same service as well. All right, let me summarize what we've gone over today. First, we talked about some SEC reporting specific grammar items that we need to be aware of when we're doing the reporting. We talked about internal parties involved in the process, and then we talked about external parties involved in the process. I hope you enjoyed the course, and now one thing I want to really urge you all to do is become an author of an article. So I will help you with some topics, I'll help you publish it, and I'll host it on the website for you. It's really not that hard. It's pretty rewarding to do as well. You get free CPE for doing it, and it looks great on the resume. Another thing that I would encourage you to do is become an instructor for a course. It's really rewarding, and it looks great on the resume too. And again, you get free continuing education for doing that. So highly encourage you to do it. Reach out to me. Here's my contact information, and we can talk about some topics, and I'd love to be able to host some of your information on this site. With that said, to get continuing education for this course that you just finished, you need to take the assessment that's on the course webpage. You need to pass the quiz with 70% or better, and then I will email you a certificate of completion as your documentation for completing the course. So with that said, thanks a lot for joining me, and check out some of my other courses.